Well, I'm back from my Seattle trip. It's time to do some stock market brief show. Sorry for the couple day hiatus. I checked out the Space Needle. It was cool. Got to see the very first Starbucks, but the line was so big we ended up going to the Starbucks Reserve. Got myself a affogato. It's like espresso over ice cream. It was so dang good. Played some ping pong at this sweet little ping pong bar. Creepily looked at some dogs outside of a skyscraper building. Got to witness the very first goal by the NHL debut team, the Kraken, and then also got to walk inside what's called the Spheres, this place by Amazon. Amazon employees call them Jeff's balls because they look like balls, which is really funny because what is it with him with like weird shaped objects? We got a lot to talk about in today's show. We have jam-packed earnings coming up. We're going to be getting into that and some charts that really determine why we should be very patient in this time. Let's get into today's show. All right, everybody, welcome back to the computer. So what do we got on deck? Well, we have some earnings going on after hours. Microsoft, Google, Visa, TXN, which is Texas Instruments Incorporated, and I went ahead and pulled what the options market was pricing in to see some of these specific moves, and you can do that in the Thinkorswim platform rather easily. But if we take a look at a couple of the charts, Microsoft is up in the after-hours session so far, and these two blue lines represent what the options market is pricing in. So come tomorrow, if it reaches up into these levels, sometimes that might be a good area to take profits and or short into it. It's actually just slightly above this. I just couldn't go up higher or I'd be getting to the indicator itself. And then from the low end right here, just beneath 302. So the option market is pricing in, you know, a fairly decent sized move, and you can see how the price is already headed towards the upper edge of that move. Now, Google, on the other hand, is rather flat, but it's a pretty large range going into earnings. Look at 26th today, and this is what the options market is pricing into the 29th, so just above 2,900, and then a low here of 2,680. So if we see a big move in either direction, you might want to think about intraday taking profits and or going short and or going long, depending on how you want to play those positions. Visa has already hit what the options market priced in at the lower range. You can see it came down here and after hours right around 224 and then started moving up. So we'll see here what takes place with Visa come tomorrow morning. Then you take a look at TXN, options market price this in. You can see, bam, breached it just underneath it and then started moving itself back up. So this already was priced in the options market too. So perhaps maybe if it comes back down here in the early morning session, it might be a good opportunity to catch a long position to the upside there for TXN. And then AMD pricing in a pretty significant move here too, but it's rather flat overall. It's going to be above 128 for that area for what the option market price into the upside and to the downside, just under 114. So we'll look for those levels to be hit coming into earnings, and also the up to the 29th is what the options market's pricing in. Coming into the 27th, we have Thermo Fisher, we have Coca-Cola, McDonald's, Sony, Boeing, and Boeing has a pretty large expected move if you take a look at the implied volatility for Boeing. So the options market is pricing in, I believe it's like around a $10 or $20 move. I can't quite remember. But I do remember it was a 60% implied volatility, and it was one of the larger ones there. And then you take a look at the following day on 28th, we have Apple, Amazon, MasterCard, Comcast, so some very big names, Starbucks as well. So action-packed earnings week, obviously one of the biggest earnings week here of the year. So it's time to be prepared going into this week and next week. I'm going to show you some charts here shortly that's kind of signaled to me that the market might be due for a minor period of consolidation or somewhat of a pullback. S&P 500, look at how the daily candle created a little bit of an inverse hammer candle. And right here, or known as a shooting star, you can tag the upper Bollinger Band, and it's coming to back test this breakdown area right here. So we could be reaching into that kind of, area of resistance, and it was a very aggressive move to the upside, which could signal a period of consolidation or maybe a pullback to around potentially even the 50-day to 20-day moving average. It's getting pretty overextended from that area. If we zoom into the chart, you can see the shooting star type candle. It needs confirmation, so it doesn't mean that this is just going to crash all the way back down. That's not what that means, but it does signal that, hey, it was very bullish, and a lot of this momentum was being driven by none other than Tesla. Tesla, we saw this huge squeeze to the upside, and we saw some weakness in Tesla although it finished up, not too bad, it also created a very large wick, which showed a lot of buyers, and then a lot of sellers stepped in. We're seeing a very similar type candle here, the S&P 500. Now, if you take a look at the SPY on the 15-minute time frame, we have not had a reconnect of the 5-day moving average for multiple trading days now, which is really quite rare, to be honest. So we'll be looking to see if we can get a reconnect of the 5-day or potentially just get some of these gaps that are filled beneath us. So it's in an uptrend. It looks very strong so far, but today's candle does show signs that, hey, we might see a little bit of a reconnect probably tomorrow or the next day to the 5-day moving average at minimum. VIX volatility was up today. Meanwhile, the indices were rather flat to up. And right now, it still broke out of this wedge pattern. It went up, it came back down. It went up, and it came back down, kind of creating this little flag right around the 20-day moving average. Tells me that there's still an opportunity to fill these two gaps ahead of us, and there's even a gap higher. It's just not on this specific chart. Now let's get into a couple other charts that are signaling to me that there could be some issues up ahead, at least short term. The NYMO putting in a little bit of a negative divergence. You can see the Nysey-McClellan oscillator. It's kind of losing steam here, so it's putting in lower highs. Meanwhile, the indice itself, the S&P 500, is putting in higher highs, so that is a negative divergence. We called out a positive divergence here, and we saw a nice move to the upside. Now we're starting to slowly see a negative divergence build there. Also, the NYMOT, very similar negative divergence that happened and took place in June here. You could see the three peaks. There were lower highs. Well, we got a high, a lower high, and a lower high taking place. This was at an all-time high. This here is at an all-time high, put in a shooting star candle in the New York Stock Exchange. So this perhaps can be signaling weakness or consolidation up ahead. Also to note, this has been reliable for the last 4 times, and perhaps now it's going to be a 5th time, but for the last 4 times, when you saw TIPS outperform the Treasury bond market at a rate of change that moved to around 1.3, and when it spiked up into these areas where you see the pink circles, we shortly there then saw spikes in volatility take place. And I said that when this crosses over, I'll let you guys know when that happens. I don't put too much weight on this because this does get skewed throughout time that I've seen in the past history. But the last 1, 2, 3, 4 times, it is proven to be quite useful tool to basically give us a heads up saying, okay, hey, volatility might be stepping in here very soon, and we're coming into that area. Also to note, we're very overextended on the BPNDX. It can stay overextended for quite some time, but take a look at the RSI. This is very similar to what took place September and October of 2020. We're seeing a very similar thing, obviously, right here. You could see it came down to 30, just like it did over here, ran all the way up, got to that overextended area right here. It's doing the very similar same thing, getting overextended right throughout here. This is not really the place where I'd want to press my longs, even though that I know the market can, keep moving up, especially during earnings week. But we are coming in very soon here to that Fed meeting as well. BPSPX, same story, getting that oversold condition above 70 on the RSI. So that right there signals, okay, not really the place that I would want to be pressing too hard, too significantly on a long position. Also to note, this is what I use as a sell signal. It doesn't mean that the market's going to crash or anything like that, but I like to use it as a warning sign and or a sell signal to basically reduce the risk that I have out in the marketplace, take some profits, etc. Well, I use the 10-period moving average over the put to call ratio, which is the CPC. And you can see here it's crossing down through this red line. That's 0.8. That is the warning saying, okay, hey, let's pay attention now, be a little bit more diligent. And if this turns back up from the bottom up through 0.8, that is that sell signal. Right here, it almost touched it. This to me was a little bit of a warning sign, but I didn't trigger it just in case because there was other signal charts too as well. But you can see it turned up, and that was when exactly the market started heading down here just as of recently. But you can see here too as well that crossed down from underneath to above. We saw that sharp little drop off right there, and then also right here it crossed up through that, and we saw some sell side activity there too as well. So we are now, if we start seeing the CPC itself start to rise here and it starts bringing the 10-day moving average back up through this 0.8, then I would say, okay, let's be a little bit more cautious, make sure you take some profits, etc. XLU over SPY. This is part of Michael Gayad's beta rotation strategy. Last week we talked about this, and this week it did trigger that risk off. So that is something to be just mindful of. When you have utilities outperforming the stock market, you're seeing basically more defensive names play out stronger than the overall S&P 500. The lumber to gold ratio, also by Michael Gayad, has been heading down south towards the zero mark, but it's still above zero, and lumber has been seeing some weakness. Meanwhile, gold has been seeing a little bit of strength other than today. So if this crosses down through this zero marker, that will tell us, hey, let the foot off the gas a little bit, maybe slow down, because there is more risk out there on the roads here in the markets. Another thing to call out that's not too important, but it is something to just be mindful of, is there's still a negative divergence in the Dow theory when you look at transports and industrials. Industrials reached to an all-time high, and the transports haven't quite reached that yet, but they're not too far off by any means. And I will say that the move was very, very strong to the upside, and it's now putting in that little shooting star candle. So it was a very aggressive move right into this previous all-time high. It didn't quite reach it, but this could be considered a double top. You gotta just think like, if this breaks out and it's a very aggressive move, you got to think, okay, how did price get there? And well, price went completely vertical. And vertical moves, they typically go through periods of consolidation and or 50% retracements from the start of the move, and then that's when it gets set up again too. So it's not necessarily the place where I'd want to be pressing long right here. And you can see the industrials also put in a little shooting star type candle as well. If you take a look at IYT here, just on the chart by itself, it's also on the daily time frame. RSI is getting pretty overbought, and we're outside of that upper Bollinger Band with that shooting star type candle. So very strong move, but I'd be looking for a period of digestion here soon. If you take a look at the housing index, now this is also pretty important. This has been diverging, putting in lower highs. Meanwhile, the S&P 500 has been putting in higher highs. So that is a clear divergence taking place, and that's not a good thing to see here. Housing market makes up a big portion of the economy, and you need to see this perform as well with the S&P 500. And we called out this divergence up until this point, and it played out to the downside. Now we're continually see that divergence build. You can see here, put in a high to a higher high. This is a low or high to a lower high right there. So it's creating that divergence, keeping that going. If you take a look at industrials, which we kind of went over, but I just want to show on this chart, it did get into that all-time high new territory. So, price action, that's strong to me. That, if you get into all-time highs, that's strong. But the way that it got there was a very aggressive move. So you want to see this digest a little bit. And it could digest for a couple of days. It could digest for a couple of weeks. It can come back 50% of this move, right down to the 50-day or 20-day moving average, and then proceed. But the reason why I don't like pressing long at these specific points is because then my money's tied up and potentially sinking slowly or consolidating. And I like to basically play breakouts of consolidation. So we were looking at moves more down here. Now when everything is getting overextended, it's the time to take some profits and then wait for a new setup. NASDAQ 100 also saw a little bit of weakness on the day, but it was up overall. Saw a big move up to the upper Bollinger Band, then reversed the move, shooting star type candle here as well. And then the IWM pretty much just opened up slightly and then just closed at the low of the day, still within this trading range overall. Fails to get really any movement outside of it. So we'll continue to monitor, see what takes place here. But what we've been saying is when it comes to the upper range, you can fade it to the middle. If it comes down to the lower range, you can fade it back up to the middle. And that's, just what's taking place as of right now within the small caps. The last thing I want to call out here is Bitcoin to gold ratio, or sailor to shift. This has been on a monster tear to the upside, but we are seeing this actually turn around, starting to head south. That does not mean that it's going to cross down through zero and this is going to crash, but I like to just point this out ahead of time. We are seeing some shooting star candles here on the price of Bitcoin, but this very well can do exactly what it did here, where it came way up, came way back down, didn't cross through zero. You can see it sold off, but then saw some strength back up, sold off, saw some strength back up, and then finally the sell signal was here. So yeah, we're seeing some short-term weakness. It was a very aggressive move, right? This is what I've been talking about also a few times. What we've noticed is Bitcoin has this interesting correlation with the S&P 500. Like it leads it by like 5 to 7 days, and that like comes and goes. But we talked about that when Bitcoin started ripping. We were like, I don't remember exactly what episode, I have to find it, but we're like, okay, well, the S&P 500, before it started taking off, we're like, well, Bitcoin typically leads price sometimes about 5 to 7 days. Bitcoin leads the S&P 500 by around 5 to 7 days sometimes. So maybe this early move in Bitcoin is telling us that a big move in the S&P 500 is coming. And that's what we saw. And the reason why I'm saying that now is now we're starting to see some weakness here in Bitcoin, short-term weakness, right? These last couple of weeks it went up, but now it's being faded. So perhaps this strong move up in the S&P 500 is soon going to get faded, and that would play, there's a lot of ideals going into that favor because we have a lot of overextended charts, etc. The BP charts, a couple other signal charts. We have the negative divergence on the Nyse-McClellan oscillator, etc. So it's a time to be very patient as I wrap this episode up. It's a time to be calm. It's a time to be very tactical and manage your risk very closely. It's not a time where you want to just look at all these other stocks that are blowing up to the moon and then all of a sudden start pressing very hard because you felt like you missed out. Okay, FOMO is typically at its highest point at around times like this, and that's when also you should probably be the most patient. Hope today's episode helped out, and I'll see you back here on the next episode.